Hey y'all, I am creating a little bit of a trilogy for you all today. So, what is a lender looking for when they go to pre-approve you or approve you for a home loan, whether it be purchase or refinance? So, they're going to look at your income, they're going to look at your assets, and they're going to look at your credit. And so, for my trilogy, I'm going to go through each one of those individual pieces. So, number one, today's video is going to be on income. What kind of income is acceptable and what are we looking for? The most common kind of income that we see is going to be W-2 income. So that's when you get a pay stub and a W-2 form. Your employer reports your wages to the government. What we request with this type of income is going to be your most recent 30 days worth of pay stubs and your most recent 2 years worth of W-2 forms. And then we're looking for stability and predictability. So one of the easiest types of income is something like a salaried position or an hourly job where you consistently are working 40 hours a week. That being said, that doesn't mean that if your income is variable, it's unusable. What we end up doing if you work, maybe it's part-time work or you just have variable hours, is we end up taking an average. So we'll look at your most recent 2 years worth of W-2 forms and then your year to date as well. And we'll make an average or take an average of that. Now, what we're averaging is kind of going to depend on what's happening with your income. Is your income steadily increasing? And we just do a basic average. Has your income experienced any sort of decline? And if it has declined, has it then since stabilized, or is it again increasing? So that's really what we're looking at when we are determining what we can use for income. Essentially what we're doing with all of this is we're trying to be predictive about what your future earnings are going to be, right? So this is a long loan, it's a 30-year loan, and so are you going to continue to make enough money to support the payment? Because again, as always, we want to set you up for success with that. So W-2 income, pretty straightforward, pretty easy to use. We're either, taking your gross and looking at your hourly wage or your salary and just figuring out what that gross monthly is, or we're taking an average if income is more variable. The next type of income we often see is going to be self-employment income. With self-employment income, you are reporting on your tax returns to the government what you have made. So that is generally reported either on a Schedule C within your personal tax returns or on a separate business tax return. We will request your most recent 2 years of both business and personal tax returns. So if you file that or report that income within your personal returns on that Schedule C, then you just have to provide that 1040 with all the pages and schedules. If you report any sort of rental income, that's reported generally on a Schedule E, which is again part of that personal return. If you have a separate business return, then we still need a copy of the personal return. We'll need both. With business income, we're looking at your net. We can add some things back in, but really we're looking for that net income. What is most beneficial for your business tax-wise isn't always most beneficial for your income when trying to qualify for a mortgage. So sometimes we aren't able to use quite as much as you feel like you make. We're really looking at the net and then adding back in what we can. But then that's why it's important that you send all the pages and all the schedules, even if you don't think they're relevant, because some of that stuff we can add back in, and there's a whole list, a whole calculator that we go through and kind of line by line add stuff in and figure out what income is allowable. Other types of income we see, Social Security and retirement income, pretty straightforward as well. With Social Security income, if the income is not taxed, sometimes we can use a little bit more. We can squeeze that income a little bit and get some more out of it. And then we can also use something like child support as income. So if you disclose to us that you receive child support, we can use that. It's usable income as long as you've received it for at least 6 months, and as long as it will continue for at least 3 years. That's not an exhaustive list, but those are the basics, probably what we see most often. If you have any questions about income or any other mortgage related questions, please drop it in the comments below. Like and subscribe, and I will see you next time for part 2, assets. Thank you.